In this video, I'm going to tell you how I actually make money from commercial property. I'm going to show you the deal structure I use and maybe how you could use it to help grow your business. Not just any sort of property, but warehouses, commercial property. That's the sort of property I love because I think it's just so much more profitable and far more interesting as a business owner, as an entrepreneur, than flats and houses. Let's get into it. Let me tell you what the smartest property entrepreneurs do. They actually like that little like button beneath me because then the YouTube algorithm gets really excited and shows them more smart ways to invest in property and be a great entrepreneur. You know what the really smart people do? They subscribe to the James Sinclair YouTube channel. And while we're trundling through this video, if there's anything that you're not sure of and I'll get a bit too technical, hit it in the comments below and I'll do my very best to answer them so that I can demystify what we're doing with commercial property. Let's do it. Now, as you're watching this video, I think there's going to be some questions that you're going to be asking yourself. Number one, what am I going to pay for it? Number two, what does it rent out for? Number three, what's the landlord's outcome from this? And I think that's really important on how I structure a deal because people sometimes want money up front, other people want income. So we're going to find out about that. What's this current valuation? How can I uplift the current valuation? So I'm going to try and get all of that into this video. So watch to the end so I can give you all the answers. Let's go. Now, there should be another burning question that you're asking yourself while watching this. You're probably thinking, well, why commercial property? Why this particular property? Well, there's a number of reasons for it. Number one, they're not building this stuff anymore. You'll see loads of houses going up around the country, but they very, very rarely build small commercial industrial units, especially in the southeast of the country. They're rare as rocking horse poop and they rent out instantly if you know what you're doing. Let's go into the numbers. Look, there's the eyes there, the juicy numbers. £465,000 purchase price, a whisker under £500,000, and the rental per annum that's being quoted if you rented the whole building out is £36,500. That scenario there isn't good enough for my return on investment because I want to get the rental number to be at least 10% of the purchase price. I'm going to go into this video how I can change that and turn the odds back in our favour. Before we talk about deal structure, we need to understand the lay of the land from both purchaser and seller, because I'm the purchaser or the proposed purchaser, and then we've got a seller that wants to sell their property. Now, whatever it is, you've got a pain point when you're trying to buy something, but there's also a pain point when you're trying to sell something. You could be selling a business because you're ill, because you're retiring, or you just want money to spend on your family because you don't feel you've got enough cash to go and do those things. So stage one in understanding the lay of the land is understand what's the landlord's pain point. In this situation, they're the seller, and I want to know what they want from it. So here's a conversation that I had with the agent to work that out.
She's been left with the building and was left with the business. She's sold the business and they've now gone. She's left with the building, and this is essentially her only income now. So her plan was to rent it out. We have had it in the market for the last 4 months trying to rent it out. We haven't had a great deal of interest just because I think how it's laid out doesn't suit that many companies. And a lot of people say, well, we're already renting where we are. If we were to move, it's because we want to buy.
Is income more important than capital up front?
Yeah, she needs to have money to live off, basically. So if you was to say you'd take a 10-year lease versus her selling it, she'd take the lease all day long because she wants to try and get an income through.
After watching that, we now know the desired outcome of the seller. They don't want a lump of money, they actually want income. That's why loads of people in the United Kingdom invest into houses and flats and they just get a regular income because actually lumps of money depreciate. So we now know the seller's desired outcome. We know their pain point and their desired outcome. In this scenario, rather than a lump of money, they want income. We need to know ourselves what's our desired income as the buyer of property, the buyer of business, or even being a business owner. Because when we know that in our heads and we've got that clear as water, we can then start to really plan a great deal. Now this is good for me because I want to be able to control the property for as little money down as possible. Now here's me just having a little conversation with the agent about how I could possibly do that. Because what I'd like to do is give her the deposit up front so she knows that I definitely want to buy it, but she could have 2-3 years rent in the meantime.
Exactly. Would the price be fixed now or in
that's what
time?
I'd want to do. That's why I'd give her the deposit.
Yeah.
Because the price is not going to change that much in 3 years, are they?
Yeah, well, you would hope not. You just don't know, do you?
Could go down though, couldn't it?
That's the thing, and that's what she's got to decide. So
that's what. So I would give her a non-refundable deposit. So if I don't buy it, now. So if I give her 50 grand, so she goes, right, I've already got 50 grand, and then I'll rent it for the next 3 years, and then she knows, well, if I don't buy it, she's done herself, she's made 50 grand for nothing. Now you're probably thinking, well James, like, why don't you just have an easy life and just put a deposit down and get a commercial mortgage? Now I could do that, but we come down to this thing behind the green piece of paper, COCD, cost of capital deployed. Think about this, you're Costa Coffee and you want to open a big chain of Costa coffee shops. You could go and buy the freehold of one of them for £1 million, or you could go and set up 4 separate coffee shops, £250,000 each, and have 4 lots of active income coming in rather than just owning one commercial freehold. That's your cost of capital deployed. So I know if I buy this property for just under £500,000, I need to put 200 grand into it for the deposit and the stamp duty, etc., etc. That means that uses some of my capital that I've got, and eventually you're going to run out of capital. Now, those of you that follow me on the YouTube channel, I've just bought Rossi Ice Cream, I've just bought a sand art company, we're just opening a zoo in Lee Valley, so I want to keep as much cash around me to make sure that I can grease the wheels of those cash flow problems. And also there's this other thing that's just happened recently over the last year where most of my businesses have closed down. You know what that is. So I'm thinking about my cost of capital deployed all the time. Now I know I can make plenty of cash flow income. My business turns around £1 million a month in usual time, so I've always got cash topping up. But even at that scenario, I'm always thinking about my cost of capital deployed. So if I can put a £50,000 deposit and do a private mortgage, for example, over 10 years, but increase the amount of rent that I pay to them, that means I control the property, own the property, and I won't have to put as much cash into it. And that really gets me going. Right, let's just quickly go over my 5-point plan on doing this business deal. Number 1, I want to do it because I know I can increase the rent. And I'm going to go into that in a minute, how I can get it up from £36,500 a year to what I think could be closer to £55,000 a year. Makes a huge difference. Number 2, lower stamp duty when you're buying commercial property over residential property. No stamp duty on the first 150,000, and then the rates are lower after that. Also, there's so many more tax efficiencies with commercial property, in my opinion, than residential property. Please get independent financial advice to check out your own situation. Number 3 is deal structure. We've already tested the water with the agent to see if they would be open to the way I want to structure a deal. Really good for me. Number 4, I've done this before, so I'm very confident in my ability to rent out commercial property. I've done it for years, in fact. Number 5, it's passive income. But I've also got another little tip here. Whatever happens, even if I couldn't rent it out, I need storage for my own businesses. So there's always a back thing on the back burner that if it doesn't work out and I can't rent it out, which isn't going to happen because the world isn't ending, it's very exciting at the moment in my opinion, and I've got the backstop for the backstop. Here's a little thing here, thinking of it entrepreneurially rather than as a traditional landlord and as a traditional business owner. Having a chat with the agent, he said, look, I just couldn't rent this building out. I've had it up for 5 months. Have a little listen to the conversation. It's interesting that you can't get this rented out. I thought you'd have people.
I mean, obviously at the moment, because of COVID, especially with the high office content. I mean, anything else that we've had, if you've got a bog standard industrial unit with a little office in the corner, everything else I've had is just gone. Like South Woodland, like everything's going. Whereas this one, you know, at the moment, if you've got a sales team or accounts team, they're all working from home. Are you going to commit to a lease when you're not quite sure how working life is going to be over?
Now, really interesting for me. Now, we've got properties in actually areas that are not as good as this area, in my opinion, that are renting out like hotcakes. How have we managed to do that? Well, it's because we think much more entrepreneurially. They're saying they can't rent it out, and I'm telling you why they can't rent it out. It's because they want long 5-10-year leases. If you're listening to this little snippet here, the desired outcome for the landlord would just be to have someone rent it out on a 10-year lease.
If you was to say you'd take a 10-year lease versus her selling it, you'd take the lease all day long.
So there's the little clue there, gang. Not everyone wants to sign up to a 10-year lease. Maybe you've got 2 or 3 or 4 or 5 or 10 staff and you think, my God, I've only been going 3 years. Who knows how the business is going to be going in 10 years? Remember, most businesses foul by their 10th anniversary. In fact, only 5% make it past 10 years old. Now, I know that, and I know that as a commercial landlord. So what you need to do is create easy in, easy out tenancies. My experience shows most people stay for much longer than they expect anyway, because they know they're in a great deal on this HMO of commercial property. So what I will do is take that property over and split it up and rent out 4 separate units. 2 offices upstairs and then 2 warehouses downstairs, or maybe just 3, 1 warehouse downstairs and 2 offices upstairs. By doing that, I'm increasing the rent that I'll get because people will pay a premium for easy in, easy out tenancies. Now here's a picture of one of my warehouses that I've got at another place that we own. Now if I offered this warehouse out on a 10-year lease, people might pay £7,000 a year for it. However, if I rent it out on an easy in, easy out basis, people will be happy to pay £1,000 a month for it. That's massively increasing the rent that I can collect. So what I'll do with this building is I'll rent one set of offices to one person, another set of offices to another person, and the person that's got the warehouses doesn't really want any offices. Thus I increase the rent that I can get. It's my HMO for commercial situation that I find has worked so well for me, because sometimes that building is too big and it's actually too small in the same breath. What do I mean by that? Well, look, someone that wants 5,000 square foot probably actually wants 8.5 to 10,000 square foot, and 5,000 square foot's too small. Whereas a jobbing business owner that's really getting going only needs 2,000 square foot or 1,000 square foot or 1,500 square foot. So I'm not going to do long leases. I'm not going to make it too big. I'm going to do easy in, easy out. It's like a houses and multiple occupation for residential. I'm going to do that for commercial. I know what you're thinking, gang, as you're watching this video. What is that brand that James is wearing? Well, it's my own Entrepreneurs University branding. This is an online training platform that I've created for entrepreneurs to seriously grow their business. I've put all the things that I've learned over the last 20 years to accelerate your success. I like to call it soaring to success. So if you want to know how to build a property portfolio, buy companies, build a profitable business, it's all in my Entrepreneurs University, and you can try it for free, gang. All you need to do is go to my website, jamessinclair.net, and give the Entrepreneurs University a try for free to soar yourself to success. Let's get back to it. Here's the other thing as well. I'm going to now send in a proposal to the landlord, to the agent of the landlord, and I'm going to sort of marry that up with my asset and liability statement, my accounts. I have all this stuff to hand. My PA sent it all over to them, and they've seen how we've acted on this on speed. I literally saw it yesterday. I've got my proposal to them before midnight last night, and all of the accountancy information goes today. You've got to have all this stuff on hand and show the agent that you act fast, because then they'll propose other deals to you. And crucially, this agent will now know how I like to work. And when something else comes up, he'll remember me. But I will put an email together for you.
Okay. Obviously, when you do, can you just make sure you provide accounts or
something? Yeah, I'll send it.
If it's going to be in a lease initially, then the purchase, or the lease, we're going to need to know the company name that's going to be on the lease. Yeah. And then whatever that company is, we need to see like the last 3 years accounts to show obviously that you've got. So one of the turnover and everything else that goes with
it. The company that we buy, it makes like 300 grand profit a year.
So yeah, as long as I've just got that to forward on to her,
I'll send my asset and liability statement as well, so you can see all of our properties. So all that helps, doesn't it? Yeah. If you've loved this video, make sure you really hit that like button, because that helps the YouTube algorithm so that we can get to more people to grow their business. If there's anything that you're a little bit unsure of, make sure you hit it in the comments below so that I can demystify for you. And if there's any other videos that you would like us to make about property, hit it in the comments below, because that inspires us to make those videos for you. Make sure you subscribe to the YouTube channel by clicking here, and YouTube's telling me you're going to love this video, so watch it. It's all about growing your business. See you in the next video. Bye-bye.